Oh, all righty. Well, welcome everyone to our bank webinar today that we're going to talk about predatory lending and payday loans and how to end bad credit and build credit. And today with us, we have James Tipton. He serves as a Chief Credit Officer at North Dallas Bank and Trust and has been with the bank for 6 years. Mr. Tipton began his career at Chase Bank through college and graduating from the University of Texas at Arlington. He worked for the Texas Department of Banking as a bank examiner. In 2014, he was promoted to a commissioned bank examiner. In 2016, James joined North Dallas Bank and Trust as the Enterprise Risk Manager, which comprised of risk management, audit, and compliance. Additionally, he was elected to serve as the Co-Information Security Officer for the past 3 years. Now as a CCO, he is responsible for credit risk management, operations, administration, and other credit-related functions. James, we're so excited to have you today, and thank you for being here, and I'll kick it over to you.
Absolutely. Well, first of all, thank you for having me. I'm grateful. And I know North Dallas Bank as well as for the relationship that we share and be able to provide these opportunities to be able to come and speak to you about whatever topic that it may be, whether it's this or budgeting or other areas we have. So first of all, I'm grateful for the opportunity and really excited to be here. And if there's for whatever reason anyone's got a question, Brenda's going to be monitoring that for me. I'm more than happy to wait to the end, or if something pops up and it's related to a specific topic, don't hesitate to go ahead and ask it. I'm more than informal, and we can walk through that. So, and then I'll go ahead and start with my presentation. And like I said, if you've got any questions, please feel free to stop me. All righty. So in this, what we're looking at today, there's a bunch of types of loans out there, right? You've got your mortgage, you've got your car debt. We've talked about 2 of those already early on. You've got other types of loans, your credit cards, you have overdrafts. An overdraft is a very specific type of loan to a bank as well. And so today what we're going to be talking about is payday lending specifically, and what these look like and how these could be predatory once we walk through some of the examples. So what my goal today is to be able to provide you with a holistic view of what we see and be able just to really gain a better understanding of what payday lending really is. What are some of the risks? How do we get there? And then really, how do I get out of there? Understanding the rates and fees. I'll walk through an example later on about just, percentages and dollars. And it may not seem like it's that important, but it really is, and understanding what that is on the global scale. Also, I believe it all starts with budgeting. To me, budgeting is probably the most important thing in understanding, because we all know life's not easy and things pop up randomly. So how do we try to think about what's coming down in the future? And I know we have a workshop specifically on budgeting. I'm not sure if I'll get the opportunity to do that one, but I'll give you a few things as we talk about budgeting. I will say that is one of my after 11 years, and I'm in financing and I'm in budgeting. Still today, I still struggle, right? Because it's very defeating sometimes, but I promise you, if you stick with it, it is very good and it'll pay off. And then, like I said, the last thing is just looking at your existing payday loans. How can I get out? There's a few workout strategies and just a few different things there. So first of all, it's probably best to start with what exactly is a payday loan. It's really those loans that are short-term, probably about 2 weeks, and kind of hence the name payday, right? They're hoping to get their repayment by the time you get your next payment. So something unexpected comes up, and now you're needing to borrow against your future paycheck, and that's what a payday loan is. When you look at the risk of them, right? There's always that need, and I think it's always extremely difficult because as you drive by somewhere, I was even watching TV, and with technology these days, they make it very simple, right? And they start saying, hey, you can get cash quick, or get it now, or all these things that they're kind of taking on the look. I'm in need. I need something. I need help for this financial condition, whatever that is, a short-term need. And so they're trying to pry on that. And so some of the down risk that you'll see is incredibly high interest rates. I know we talked earlier on one of them, it was 14%. When I show you the examples in a few, they're mind-boggling what the percentage rate that these payday lenders are actually making on that. It's also hard to pay back on time. I mean, once you get down that rabbit hole of having it one time and something else comes up and then something else comes up, it's just a continued effort. And it's really hard to get back in some instances. And then what happens is it just rolls on to the next paycheck. And as I said, it just kind of rolls over and over. And so I'd like to first start out with just really a poll question. You'll see it here on the screen. What are the most common reasons for a payday loan? If people want to chat in here, or people are more than, I know it's kind of difficult here in Zoom, but more than happy for people to kind of shout out or kind of give me your opinion of what you think it is.
Lack of savings.
Okay. Anybody else?
Well, what I was going to say is an unexpected emergency. I know last month, I think I had a car repair and it was like $1,200 for like to change the timing belt. And I would have never guessed that I would need to do that.
Right. Yeah, and you're both correct. And even though the unexpected wasn't on here, that actually is on my next slide. So Jacqueline, thank you for that. But the answer to this is actually A and B. And so as we go to the next stage, right, it's the exact same thing, what we're saying. It's these unexpected things that come up in life, right? We don't expect, a lot of this stuff. I mean, we're sure not planning on a medical emergency, or you're laid off, not having the savings or the credit, or that very last one, right? I had to make an unexpected car repair. Jacqueline, you're exactly right. I mean, these are the things that pop up in our lives. And I mean, I know at least in my budget, I literally have it's life as a line item that I have, because these things are so unexpected. Something comes up and we've got to figure out, okay, what can I do to try to maybe proactively take care of these things? And I'll share just a few things that, I personally do that might be able to help you. But yes, these are definitely some of the reasons. And I mean, this is not an exhaustive list either. This is not an exhaustive list either, because there's obviously more things that can pop up that you're worried about, or something that actually happens that you've got to have it, right? And so really, how do these work? Kind of just there's a lot of words on this page, but at the end of the day, what they're going to do is verify that you do have a checking account number, and then they'll deposit those funds in there. But what they also do is this, they're required to kind of post data check and saying, hey, they're going to get their money is what they want. They want to make sure that they're going to get their money. And so here's just a little example of here, you're granted $500. And once again, this isn't, I'm going to pay you back in a year or 6 months. This is paying back usually within 2 weeks. There could be some that are up to a month if you're paid once a month, but sometimes it's, obviously we're paid either weekly, 2 weeks, every other week, or once a month is kind of a sporadic, depending upon how you get paid. And so what will happen is, you'll have a check for $500, and then 14 days later, you're writing a check for $563. And so I'll show you an example here in a little bit, this more on this later. $63, okay, maybe it's $63, maybe that's not that much, but at the end of the day, if we're trying to cut expenses somewhere, I'll show you where this is really significant. And then obviously, if you get to that point in 2 weeks, and what if something else comes back up, or what if something changes and you're not able to pay that back, then this could continue to roll and roll. And I just thought this was a very staggering statistic down here, is that the average payday loan is usually there for 5 months of the year. So once again, you're going into and thinking, okay, it's for 2 weeks. I'm going to get in and I'm going to get out. But on average, it's about 5 months of the year. So what's the big deal here? I think it's important when I look at percentages and numbers. Obviously, I'm a finance guy. I love numbers, and I'm always I always kind of laugh when someone says that that went up 100%. I'm like, well, did it go from 1 penny to 2 penny? Because, you know, that's technically 100%, right? And so I think when you look at these numbers, especially for these payday loans, it's always good. And really just in life, looking at both of these, what's the dollar number and maybe what's the percentage of that increase? I mean, let's look around what we're looking at today. Inflation is at it's at really almost an all-time high. It's, I mean, going to the grocery store, right? Buying milk that's usually $2, now it's $4. You know, that is 100% increase. Well, as we look across the board, I mean, I don't have the exact numbers in front of me, but you think about, you know, used cars, you talk about groceries, you talk about gas, you talk about dining out, and the list goes on and on. This is the stuff that we live on day in and day out, right? These numbers are all 20, 25, 30, 50% increases in values, and it's drastic. And what does that do? That compiles on top of each other each time. And so as we look at that example, you know, when you look at the actual interest that's on there, these payday lenders usually, you know, we talked about a 15% is kind of common for a credit card, or maybe, you know, a higher rate on your car loan, or some credit cards are 22%. But that's over a year, right? Conceptually, that's over a whole year. This is only in 2 weeks. And so if you were to take that same thing and annualize it, you'll see my numbers there, you know, anywhere from 300% to 500%. And I think this example here will put it into perspective a little bit better. At the end of the day, I don't think we would ever on a car loan, I know I heard 14%, but 300%, right? We would never pay 300% in interest. On credit cards, even though it's 21%, the alternative is 300%. And that's where this payday loan here. And so, you know, as we look at our, you know, you buy a car, and these are just some examples that you can see, but the amount of interest that you're paying is staggering. And so I want to, you know, kind of bring that home is looking at a payday loan. Well, it's only $500, and the example we used was $63 in theoretically interest from that short 2 weeks. If you were able to put that over a year to kind of compare apples and apples, then you can see the significant amount of interest that you're paying on this. So you got $500 and you're paying $1,100 in interest. So 300% in that. And it's just, to me, staggering. And so I think that's why it's very important that we understand not only what is the kind of the short term, what's the, you know, the fee there, that's kind of that, oh, it's only $63. Well, in reality, it's substantially higher. And I think that's why it's, you know, trying to, as much as you can, be able to, you know, avoid these payday loans and really truly understanding some of this metrics. That's what I'm trying to bring home today. Are there any questions so far on anything that I've said? All righty, we'll keep going on. And pretty much the answer is no, right? We would not be accepting these terms. If we went to a bank and they said, hey, you know, yes, you can have that car loan, Jacqueline, but it's going to be 300%. I think we would all agree that, you know, it's no. And I think that's where that unfair and the predatory that we keep, that, you know, this is part of, this is where this stems from, is really understanding these numbers and understanding kind of the backing and the full context. And they want to, you know, as they're advertised, it's short term, the fees are not that much, but in reality, I hope those examples kind of bring home exactly what the fees would be. As we look at these, kind of a summary, right? Let's kind of take all of these things that we've learned and try to put it together. You know, really, payday lending, as it says on the screen, is not a one-time solution to a temporary emergency situation. You know, I mentioned earlier, right? It's a 5-month, or on average about 5 months. And so while we may have thought and assumed that, hey, this is going to be a short-term fix, it's going to continue to increase each month. So number one, how do we correct this? How do we how do we try to be proactive, or, I'll even use the word strategic in what we're looking for. And number one is have a plan. I know number one says there is a budget, but number one, I believe, is have a plan. You start with your plan and you decide, to me, it's, I want to, be able to have enough as much as I can for some emergency. And so number one there you'll see is create a budget. When I look at budgets, I think there's two important things. Number one is make sure that it's reasonable and attainable. You can think all day that, this is kind of, because to me, if I set a budget and it's not realistic, then I believe you're setting yourself up for failure every single month, right? You think you're doing well, but all of a sudden something happens and now you're out and you can't do it. Having that budget and then also sticking to it. But then I would also say number two is what I've tried to do in my personal life, and the example of the $1,200. I would ask the question: is it easier to come up with $100 or $1,200? And is it easier to come up with $50 or $600? And I think we could all agree very easily, well, yeah, $50 and $100, that's a lot easier. Well, then how do we do that? And I use 50 and 100 because that's what we're trying to account for each month. I can't tell you how many times I never had an expense and then all of a sudden the next year I had. So let's just say you had $100 a month and you put that back into what's called this emergency fund. You put back $100 each month, and by the end of the year, now you have $1,200. The worst thing that happens is you have to use all of that money, right? The contrary to that is, I don't have that money and I've got to go do something else. I know there's always, well, is $1,200 enough, or what's the number, or how do I get started? At the end of the day, $5 is more than zero, right? And so to me, it's trying to look at your budget, look at how much quote unquote excess you may have, even if it's just a little bit, and be able to put that back each month. Like I said, $50, $100, $200, that's going to add up over time, and it may take time, right? And you may have a bad month, or you may have something that sets you back. But I think being able to stick to the budget, stay on plan, especially if it's reasonable and attainable, you'll be very successful in making sure that you're able to manage that. And I know that North Dallas Bank, we do have a special area on budgeting. I'm not sure if I'm going to be able get the opportunity to do that, but I know that we do have a great plan. I know some of the other people that I work with are really good at it. They've been doing it for a long time, and so they've got some really exciting stuff. So I would highly encourage you to tune in. I also looked at the list of some of the other opportunities that y'all are getting at, and there's a lot of really good stuff in there, some good topics. And so having that time, I believe, is important. And I know, I'll be honest with you, I love budgets, and I'm probably that nerd that likes to deal with numbers all the time, but I would be more than happy to help you with that. It's honestly a passion of mine. I've enjoyed it, and understanding what that is, identifying all the possible outcomes, and identifying what that is. And like I said, I would be more than happy to share that. Brenda, I'll share you with my information. I know I talked with Philip James, who I believe has worked with y'all several times, and he said he would be more than happy to. But I believe it's important, and trying to have as much financial independence as you can, and have that. It's such a relief. So on number one and number two, that's what I would say would be reasonable and attainable, and then try to find ways to think, medical bills. I mean, and I use the example, let's say, you try to put money back for gifts for people each month. Well, put $50 back, or put $100 back, or whatever that is, just to know that, hey, there is an expense there. And those are things to think about. But medical bills, think about those. Car repairs, think about those. Home improvement, something breaks and you've got to do that. But also, reward yourself too, right? I mean, there's ways to do that and enjoy that. So I know that's a little bit not specifically on the payday loans, but I'm a true believer that a budget is very important, and being able to maintain and stick to it month over month is extremely important. especially because you can also think about where are you spending your money. And I think that's the reasonable and obtainable that I'm talking about. Step 3 is looking at other alternative lending. There's obviously your credit cards out there. And as you saw, there is a different piece there. Obviously, you're establishing your emergency fund. That's important. There's, other areas for lines of credit or, personal items that you have here. Banks have these opportunities, and those are all ways to be able to identify what those look like. And at the end of the day, I think exhausting all of your options that you can do to avoid the payday lending will definitely serve you well. The next area is looking at, repaying these types of payment, these payday loans. Here's a few options you have here. Here's 3, but number 1 is ask for a rollover. If you do have one and you need to do it, you'll see that they will charge you another fee, but hopefully, by that time you'll have enough to, pay that off. Also, they have these different programs. If you're, extended pays for a long time, they have to look at it a little bit differently. And there's organizations and trade organizations that offer against that. And then the last one is this debt management plan. You basically work with a counselor. I'll send up the next slide is actually, I can go ahead and put it up there. There's basically 2 different counseling services that you can work with. I'm not sure. I know I've got the link here. You can click on it. I've talked with Brenda, and she said that we're going to be able to post this out there. You'll have access to this this PDF after the conclusion of this. So, feel free. There's 2 different areas there that can help that. But then also, I mean, there's also people that are, willing to help too. I know there's different organizations out there, or just people that you may know. Find you someone that you can talk with and that you're confident in, and that will help you walk through whatever situation you're going through. And that's always a great option too. So in summary, really at the end of the day, I hope that you were able to gauge a little bit more, number 1, about what payday lending is, and really just try to put into perspective how the magnitude of the interest may be and what that looks like, and how it is a kind of, once you get in there, it's a keep going. Also, these fees and interest, they far exceed what anything else would do. And I mean, as I stated earlier, you would never pay 300% for a car. So, we would never want to pay 300% for a payday lending. And then I've said it here, I'll keep saying it forever, but number 3, stick to your plan, stick to your budget, and being able to utilize other things out there besides having to exhaust or to have this right here. So I think, let me make sure. Yep, that was it. So I'll pause right now. Any questions, comments, anything you'd like to ask, I'm more than welcome to.
So James, there is a question in the chat from Jacqueline about auto repair insurance.
Okay.
If you wanted to comment on that.
Yeah, I know that I'm not an expert in that field for sure, but I do know that there are areas that do offer the insurance for you. I don't know all the specifics, but I would say that as you look into them, try to understand what's really covered. I know sometimes, they may fix only one little piece of something. I think if you think about, if you own a home and you have you have your home warranty insurance, I know sometimes they're very similar. I would also just look at the credibility of these car repair items. But yes, that's a great opportunity. That's a great item to look into and be able to, because what that's going to do is help you with those unexpected things. And you can budget, maybe a lower amount and know that it gets covered. But I would just be very specific on what exactly does it cover, and some reviews, or if there's anybody else that's out there that can tell you specifically what that would be.
Yeah, I think, James, that's what I was thinking, to make sure, Jacqueline, what it would cover. And I'm thinking that what you're talking about is like an extended warranty, like James said, right?
Right.
I'm not sure. Yeah, it might be translated as insurance, but I think most of the time it's called a car, warranty on your car, just like,
That's what I was speaking of.
yeah, yeah. So yeah, that's a really good point to see what it covers. And a lot of times the big stuff isn't covered,
Right.
that you're insuring yourself against. So,
Well, and I just want to interject something too, is that you can also buy those when your regular car warranty expires.
Mhm.
And that way you're not paying for it during the course of the first 3 to 4 years. That money that you're saving could be put in an emergency savings to cover other expenses, because sometimes that extra extended warranty fee it's always going to add to your car payment.
Right.
But allowing that, money then instead to go into a savings account, and then expiration of your regular car warranty, then add an extended warranty, covers you for the future life of the vehicle.
that's a great idea.
Yeah, great point.
Great point. And Patsy, we love your comment that you love budgeting. You want to share with us how that works effectively for you?
Well, for myself, it helped me to get out of a lot of debt, but I was a financial coach in my last position, and I was able to help other people get out of debt, and to see them create the budget and be successful with it, that was amazing. So that's a great feeling.
Uh-huh. And as financial coach here at JFS, that's really a big part of our conversation every day with our clients. And it's so amazing when somebody has never worked with their budget before and they suddenly figure out how much they're really spending on food or dining out. And it's such an incredible aha moment when they're like, oh my gosh, I can't do that. And they don't even realize they're doing it. So we love it as well. And the success that people find from it certainly helps them save money for emergencies, save money for future goals in their life, and also pay off debt. So
Yes, ma'am.
yeah, so thank you for that comment. And then we're back to Jacqueline and her car.
Yeah. So, at the end of the day, when it comes down is, credit score, payment performance, those are definitely items that you look for. There's a lot of different, banks, there's credit unions, there's just different opportunities. I mean, we offer car loans ourselves. But really at the end of the day, I think you're looking maybe at like a refinance. Most likely is saying, hey, I got this high interest rate, but I've demonstrated my performance for the past year, 2 years. I've proven what I've done. My score is improved, whatever that may be, and being able to go and just, you would basically file out an application for a refinance on your car is the way that I would see it. And, while interest rates have been rising very frequently over the past, month or so, I would assume rates are substantially lower than that. And so hopefully you could find something once you've got that, or once you've, demonstrated that performance, like you said you had. I think you could easily do a refi somewhere for that.
Okay. And also I have a question. So one thing that I've been thinking about is like maybe sometime over the course of the summer is saving up some money so that, as you suggested, when I do approach a bank to say, okay, I have this, high car payment and then this interest, but here is $2,000 or $5,000 that I have saved, and I would like to finance with you to lower my payment.
Right.
Do you think that is a good idea to do?
I
just continue to pay on it until I'm finished with it?
No, I think it's always important. I mean, I know, at least for me, I'm always looking for the lowest rate too. At 14%, that is very, sizable interest that you could be saving each month. And then I'm sure if you broke down your P&I payment, you could easily see that. And, obviously having more equity and cash, one of the other components is a loan to value. And so depending upon, and you also have to look for finding the right match on the bank for like the age of the car. That's something that banks do consider, obviously the mileage and different items, but at the end of the day, having more equity and that's what they call this, skin of the game. They show that you've got, and you've demonstrated it. To me, those are all three strong characteristics of being able to refinance that. But I would also say is just making sure that before you do and before you put down your money, put that in context of how much you have in your savings, because, you know, at the end of the day, let's say you had 2,000 and you used all 2,000 for that. Now you have no reserve, right? You have no rainy day fund. And what if something breaks the next week and you've already done that? It's really hard
Yeah.
to, you know, maybe, or it's very hard to get that back out once you've put it in there. So, but I think, you know, you start with, you know, the basics of, hey, here's my performance, this is where I'm at. And then maybe the bank requires more equity, but I think you can start at, you know, where you're at just to try to get a cheaper rate.
Okay.
James, thank you for that. We know that credit score isn't the only thing that the banks look at. What would you say would be a good minimum credit score for like an auto loan?
You know, we've looked in, I want to say somewhere in the upper sixes, lower sevens. I don't have an exact number, but I know that's, you know, really what we're looking at. You know, the 700s is usually what we see. But I think, and really every bank's going to have a different parameter, but I think if you're upper sixes, lower sevens, you know, you'll be able to get into that.
Okay. Okay, thank you.
Mhm.
Does anybody have any other questions they'd like to ask?
No.
I have a
Thank you all
question.
for having this.
So, James, are you aware of any small dollar personal loans that banks offer to consumers to help them avoid, you know, leaning on payday loans? And on average, I mean, I'm understanding that especially with the lower credit score, we are talking like maybe 18% interest, 20% interest from a regular bank, but at the same time, it's better than 300%.
Right,
So
right.
what kinds of loans, personal loans, are available through regular banks?
Yeah, we do have personal lines of credit, and they're unsecured. And really that is, you know, there's different scoring matrices. Some of them are predicated specifically on the credit score. So let's say you have a higher credit score, then you could get approved for a higher amount, right? So let's say if you have over a 780, you get $5,000. And if you have over 700, you get 2,500. And then, you know, 6 something, you get 1,000. So there are different ways that banks have and, you know, like I said, we offer those too, because obviously that's, you know, it's important to have those things. You have, you know, some different types of lines of credit, similar to that. So.
Great, thank you.
Mm-hmm. Thank you.
Somebody else was trying to say something before? No, I thought it was somebody else.
Well, I just want to say thank you all for having this. I always learn when I, attend these. And I also wanted to say that there was a young lady at the JFS that helped me. I don't know if she's still there, Miss Kennedy Thayer. And she was really good at, helping me, establish a budget, and we would make appropriate adjustments. And there has been a silver lining that my student loan, I'm completely done with that. That's been, taken care of.
Congratulations. That's huge.
Yes.
That's awesome.
So I worked almost 19 years in government. So that's one of the things that helped me in getting that, taken care of through public service. But so the only albatross I have right now is just this car. It's like my only 2 things is house and car. Everything else I've taken care of. And we know we're going to always have the house as long as we have a house. But if I could get the car, taken care of, it would just be beautiful just to have, house payment and just utilities.
Right.
So that is my goal.
Mm-hmm.
Well, and you know what, I think that points back to the overall thing, Jacqueline, what you're saying, right? You have a plan. And I think that's what's great about that is you have a plan and you're making your steps every day to do that. And I think that's the biggest thing. And so if you continue that, I mean, that's great. There's nothing more relief of paying off at least one debt, right? And then you move on to the next one. I mean, I recently wrote an article on, the 2 different methods of the avalanche method and the snowball method. I'd be more than happy to share that too. I'm not sure where it is on our marketing, our Marcom department, but I know that was drafted and that's a interesting process and be more than happy to talk about that too. But, there's different methods on, getting rid of debt and finding that. But at the end of the day, the root cause is, or the root benefit is the budget. It just aligns your expenses, put you on path, and you're able to see every month, every quarter, every year, your ways to make progress to that. So great job. That's something to be accomplished. So, and I think that's
Jacqueline-
also,
Oh, sorry, go ahead.
and I'd also say is just celebrate those victories. I mean, finances are extremely hard, right? Sometimes, and don't go too crazy, right? But, go treat yourself, because that's huge. That's a huge accomplishment to be proud of. And so I'm always an advocate for that as well.
So I was just going to say, James, we really do use that snowball and avalanche method here
Right.
as well in our coaching. It really works, Jacqueline. That's probably what you worked on with Kennedy, I'm thinking, when you worked with her. We talk about it every day, and it
Right.
really does help people. They'll look at it and say, wow, they can be out of debt in a year, or maybe it's 2 years, and it really, really works. So,
Yes.
and Jacqueline obviously can attest to that. But anyway, if anybody else have anything you would like to add or suggest, I'm going to put a poll up here. It'll take 10 seconds. It's just one question. If y'all would answer it, it gives us an idea of how our webinar worked for you. And if anybody has anything else, you can speak up now if you'd like, or we'll just we'll wrap up. Anything? Okay.
Well, I just say real quick,
Thank
thank you for having me. I'm really grateful, and I hope the polls were off the charts, right? But I really do appreciate it. It's always an honor. I truly do love this. It's a passion of mine, and I get to live my life every day working in banking with numbers. But anything that we can do to be able to continue to further that information, like I said, if you have questions after this and you're like, oh, I forgot to ask James that, don't hesitate to ask that, or to reach out to Brenda. Brenda, I believe you have my contact information with my signature line. Like I said, any questions you may have or budgeting tips, I'm more than happy as well. So thank you all very much.
Thank you, everybody. And please, are you able to see the poll? Everybody, can you see?
The poll is only showing me poll results. It's not giving me the
Okay.
actual.
And it's not letting me record it. My
Okay,
answer.
hang
Yeah.
on. Hang on. Relaunch poll.
Relaunch.
Okay. Okay, can you see it now?
Yeah,
Yes.
it's good.
It's going, okay.
Mhm.
Looking good, James.
I know. Let's keep. I hope no one puts this is the most nerve-wracking thing right now. The presentation is easy.
Your grade, your score. No, you did amazing, and we appreciate you so much taking the
Absolutely.
time today and
You're more
sharing
than
your
welcome.
presentation. You guys, appreciate all of you for coming and joining us today. And we will be posting this live recording on our Building Financial Power website as part of the Jewish Family Service website, and also his PowerPoint with those links that he shared. So we appreciate everybody. And thank you so much. We have these twice a month, and every month we do different topics. And next month we'll be talking about bank fraud, another big topic in the world of banking. So please come back and join us again. Thank you, everyone.
Yes,
Have a
thank you.
great day.
Thanks, James.
Thank you.
Thank you. You're welcome.
Thank you. Thank you, James.
Mhm.